Uh, okay, so we look at trends, we look at support and resistance. Like we discussed last week, trend refers to general direction in which a currency pair price is moving over a certain period of time. Okay, so we have the three types of trend. We have the uptrend, we have the downtrend, and we also have the consolidation, which is, you can call it ranging. Okay, so those are the three types of trend, or you call it sideways, all right, sideways trend. So, and we use this illustration, this image, to show us what a trend looks like. So when the market is trending up, it will be creating levels, okay, we call higher highs and higher lows. Okay, now as long as this high is higher than this previous low, so this is a higher high. Now it came down, it created a higher low because you already have a low here. So this low now is higher than this low, all right? So this becomes higher low. Now the market moved up again and broke above this level. So this is what we call break of structure, all right? You learn all of that in the course of the journey. Those are intermediate terms by the time you begin to use all those terms. So this is break of structure. Now it broke structure and the trend continued up and it created a higher high. All right, so this high is higher than this one. The reason why it is called higher high. And it came down, all right, to create a new low. Now, this low is lower, this low is higher than this low. So that is why it is called higher low. All right. So as long as this previous low has not been taken out, this is a higher low. I'm in a class. Tell your mommy to attend to her. All right, so that's trending up. So we have this higher high, all right, higher low. So this is what shows you that the market is going up. All right, excuse me 1 second. All right, so in the case of downtrend, so now this is an uptrend. This first is uptrend, this is a downtrend, all right? This is what we have done before. I'm just trying to run through it again. So now the market, after a while, it has moved up because the market does not move in a straight line. All right. Yes, there may be an overall direction, whether the market is going up or is going down, but it moves in a zigzag manner. So it does not move in a straight line. But in the long run, there is this direction that the market is going to. So now, well, let's look at the case of a downtrend. So in the case of a downtrend, all right, they break the now let's assume this was the movement up. As soon as the higher low has been taken out, the trend has changed. So in this case, we have this high and a lower low was created. Okay. Now, this is another high, all right, which is a lower high. Is a lower high because it's lower than this previous high. Then you have this thing break this previous low, all right, and create a new low. So this low is called a lower low because it's lower than the previous low. Then and again, it pushed up, creating another leg up, which is a lower high. Is high, but this high is lower than this previous high. So that's why it is termed a lower high, lower low, and so on. All right, so let's continue on the. So this now, you see this once now shows you a change of trend, okay? So in this case, this market was coming down, forming lower low, lower high, lower low, lower high, lower low, lower high. All right. At this point, the market was ranging. All right. Now it's now created a neckline. Okay. So now this high has been maintained and it created equal highs again. Then this market now broke above this high and did a retest. And the journey upward continued. So right now, you now have this now is a higher low, okay? Because you already have a low here. So this becomes a higher low. This is higher high, higher low, higher. So this is a break of a change of character, all right? When trend wants to change, it breaks the previous low or the previous high to change the market direction. Okay, all of this you'll be seeing on the chart. And I think the next image breaks it down better. Now, this image now breaks it down better. So now this image was actually trending up. The market was trending up, creating higher highs and higher lows. You can see how it is on the chart. You know, when we draw those lines using it as illustration, it was very smooth and easy. But on the chart, it's not smooth that way, but you can spot them if you begin to develop the eyes, okay? You can begin, so you can see now, this is higher high, this is higher low, all right? Now, this is higher high because it's higher than this previous high. Then it created a new low, but this low is higher than this previous low. So this is why this one is termed higher low. It now created another higher high here, all right, because it is higher than the previous high, and came down again, created a new low, but still higher than the previous low. So it's a higher low, okay? So now it came up and created this peak, higher high, all right? Created this peak, higher high, and now came down. This is supposed to be the, okay, created this higher high and broke this structure. There's actually, in as much as it was not labeled, this was the previous low. It broke it, all right, also breaking the trend line. All right, it broke it and also breaking the trend line and went back up. So this was a breakout. It went back up to do a retest. So there was a range, all right, within this period of time. If it's a daily candle, so this thing happens after a break, it takes about how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9. It was the 10th day before the market finally broke down, all right, of the retest and the trend down continuing. If it is 4 hours, which means every candle here took 4 hours to form. If it is 1 minute, it took 1 minute to form. One thing you should note, which we have learned in the past, is that every candle, depending on the time frame, takes that whole time to form. So if it is daily, it takes a whole day to form. If it is 1 minute, it takes just 1 minute for a candle to form. Okay, so now after this break now, you can see that the trend has not changed. So the same market that was going up, creating higher highs and higher low, has now come down and is now creating lower highs and lower low, lower highs and lower lows. Okay, so that is for support for trend line. So we also discuss about support and resistance. While I say support is a floor, okay, support in the market, there is the support and resistance has floor, okay, and ceiling. I use instance of a story building and you're on the first floor. As you are marching on the floor, which is the decking, all right, it takes you as a support. So you are there for you to pierce and begin to come down. You know, it takes a walk for that wall to break for the market to begin to come down. It's the same thing, you who is there, for you to come down from that place, forget about using the staircase that must have taken you up or the elevator. For you to crack and go down, you must have impacted that floor. So let's assume you are using sledgehammer and every other thing to hammer it. Over the time, it will become weak and it will break open. Then before you can now pierce down to the down floor, all right, which will now later become a resistance, because now price support and resistance is determined by the current market price. If price is below, it's resistance. If price is above, it's support. So that was the explanation I gave on support and resistance. Okay. All right. So let me just support. Say a price level where a downtrend is expected to pause due to a concentration of demand. Okay. Why it happened? As prices fall to a support level, buyers are more likely to enter the market, creating a floor. Example, if Euro USD falls to 1.0800 several times but doesn't go below it. Now, can you see that word several times? Okay. Now, as it is coming several times, it's bouncing on it. That floor is getting weakened. Okay, it's getting weakened. But it may still from there go up, but a time will come that the pressure will be too much, and because of the fact that the pressure has been on it for so long, it will now weaken and it will break and the price will go down. So that previous support now becomes a resistance. So if Euro USD falls to 1.0800 several times but doesn't go below it, 1.0800 is considered a support level. In the same vein, you have the resistance. A resistance definition: a price level where an uptrend is expected to pause due to a concentration of selling interest. Why it happens? As price rise to a resistance level, sellers are more likely to take profits or shorts, creating a ceiling. All right? It's the same thing when you stand in a story building and you are in between two decking, okay? The floor is a decking, the ceiling is a decking. You know, you cannot pass through the decking easily to go up. You want to do the same thing I explained on the floor, so you want to begin to hit it, to break it using sledgehammer, but over time it will open and you can pass through. As it goes up of the ceiling now, the previous ceiling becomes floor because you are the price has gone up. That makes it a floor and it's now a support instead of the a resistance that it was. So here, GBP USD is used. So if GBP USD rises to 1.3000 and repeatedly fail to go higher, 1.3000 becomes a resistance level. All right, so before we go to type of analysis, this is where we will now go to the charts. All right, this is where we'll now go to the chart and begin to see these things live. Okay, so this is my chart right now. All right, I'm actually on this trade. This is BTC USD. So let me minimize, let me refresh this because this is a trading view implementation. And these guys, their implementation is not 100% yet. So each time you leave the chart, when you come back, you have to refresh to be sure. Okay. So this is a chart. All right. This is a chart. Now, first, I want to show us what a trend is. Okay. Now, this market was trending down from this level. Okay. Created this high. This is low. Now, this next high was not able to swallow this one, and it broke below this previous low. Okay, so this low, now let me be using, now, this is a high that was created. Okay, now, so we'll call this a high. Now, after this high was created, now this low was not created. Okay, now, another high was created. So these double equal highs were created, but could not swallow this previous high. Okay? So right now, this previous low now has been broken because see, the price has broken below it. Because now this trend was actually going up. At this level, we'll say this was actually going up with this short movement. You can call it an uptrend. If you go further to more lower time frame, this is what has happened. So the market was going up, but at a time, came like this, now created this, all right, and finally break. So it created this as the next high. This high now, this high could not swallow this one. So this one still remain the highest. Now, and this one remain the low, the recent low, this is the recent high, and this is the recent low. Now, it happens that if price has created a new high, it will be a continuation of the trend. But because price did not create a new high and came and break this low and came down to this level, what has happened is a change of trend, which we call change of character, okay? So now it came back and created a new high, which is not higher than this previous one, but is lower than this previous high. So this becomes a lower high, okay? And now came here again, created a low, all right? And came back up, created a new high, and the high did not take out the previous high. So this one becomes a lower high because it's still lower than this one. So when you are going down, you are creating a set of lower highs and lower lows. Now, the market came down here again and created equal lows. Now, after creating equal low, the market now break the previous high, all right, and now came down, all right, created a new low and took off to this side. So you can see how this market moves. This is how the market moves. So okay, so now this one also has been broken. So this is how a series of lower high, lower lows, higher highs, higher lows would be created in the market. So now, this is just to show you how to identify the trend. Okay, I started with this, all right? This market came like this from low, you know, so this was trending up and it came down, all right? Created a high that could not take out the previous high, then broke the low. So from here now, there's a change of character here. So change of character is simply change of trend, okay? So this level, this was what we saw, the change of trend. So there was a change of trend here. The trend changed here and the market went down, all right? The market went down. And after the market went down, it still could not sustain and the journey up again resumed. So you can see how, so this is another change of character. Back up. Back up. As if that was still not enough, the market is still moving the same range, all right, and still came down here again to change character, to go down. Okay? So this is how trend moves in the market. Now, you see this one that is happening now. It may either from here go up to break this high, or the market will continue to go down. But you won't be able to tell completely what the market is doing next. So what we do here is we work with previous data, all right? The previous data I'm talking about now is these higher highs, higher lows, all right? You want to see change of character and all of that. Both on the lower time frame and the higher time frame, they have a way of influencing each other. All right. On the higher time frame, an uptrend may be maintained, But on the lower time frame, you'll be seeing a change of trend up and down, just like you have seen here now. You have seen here now, there is a change of trend up and down here. But now let's go to daily. Let's go to daily. So now when you come to daily, can you see that we have maintained an uptrend? All right. But between where we did those drawing up and down just now is not up to 2 days. Those movement up and down is not up to 2 days. But can you see that consistently this market is going up? So that's why we have people who trade swing trading. Now the swing trading is when you place a trade, it's not a trade you want to get the results today or tomorrow. You place a trade, you want a trade to maybe for 1 week, 2 weeks, 3 weeks, even months. Or by the time it becomes months, we call those one position trading. All right, position traders does that. Okay, so the noise in between, you won't see it. All those noise in between, you will not see it on the daily time frame, on a higher time frame. Those small noise you saw on the lower time frame, those noise, you won't see them on the daily time frame. Okay, so still now talking about trend. Now, apart from trend, there is what we call trend line. All right. The trend line helps you to spot easily when there is a change of trend, which is change of character. So if you look at this market, as it was trending up, it was creating higher highs and it was creating, as it was trending down, it was creating lower highs and lower lows, and you can connect the dots. Okay, so now look at what happened as this guy was going down. Now I have connected. So this was the first high, this is another high, this is another high. So I've connected these three, 1, 2, 3. Now with these three, I can draw this guy down, which is what I did now. Now look at what happened. The market was coming down. This is the same market I used on the same 5 minutes previously. Okay, no, we're on daily now. We're on daily now. Okay, so the market came down and crossed this level. So this was where you got a change of character. And do you know that this change of character that happens when this trend was first broken, when the trend line was first broken, the market remains stagnant for how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it was the 10th day we now had a movement. And even on that 10th day, it still did not break structure. So this was the previous high that needs to be broken. Okay, so right now, look at the candle that broke the previous high. This candle broke the previous high, giving you a confirmation that the market is now ready to go up. Okay, so now this market is now going up. So this is change. So I started with, this is a trend line. After showing you what trend is, uptrend, downtrend, I've also shown you trend line. So this trend I showed you now is a downtrend. Now, in the same vein, let's go and look for where I'll give you an uptrend. Okay, so this is an uptrend. First, I want to connect the first 2 points. So this is the first point. And this is the second point. So if I connect these 2 points, I want to maintain the line to any level. So I have maintained it to this level now. So you can see now that the market was trending above this guy. Now this trend line, there are different ways to connect them. I can decide to use this one. I can also decide to use this one and connect with the next level. So this one, I use this one now to connect with this. When I connect this one with this, is also connecting with this one and all of that. So all of these are trends. You know, there is nothing, is not perfect at any time, but you need to know how to begin to draw your own that it will give you the results you are looking for. Okay, so this was trending up and the the trend break below, and the market structure changed. And this guy that was going up broke below this level. And although this was not a smooth one, but the market changed, went down for a while, all right? And possibly you can call this a consolidation. Someone is messing with my screen. Who is that, please? Okay, so, okay. Okay, let me. Okay, so this is just the same way the uptrend. Now, let's now look at a sideways market. Let's now look at a sideways market. Okay, so now this is a sideways market. All right, this is a sideways market. The market is not just giving a direct, no good movement up and down. So this is actually a daily candle. This is daily candle. So if you count this day now from this is from 23rd of June 2023 to 17th August 2023, 2 months, almost 2 months, all right, the market was ranging. This market was ranging in a particular spot. So there is no clear direction. Although if you go down to a lower time frame, you'll be catching something within this range, all right, but there's no clear direction of this market. Then after a while, it broke down as if the market wants to come down. It's still not enough. It created another range again from this level. So it started creating another range again from this level until it broke out. So you can say that BTC USD was actually ranging for over 4 to 5 months, all right, before it gave a clear path that the journey upward has begun. And the journey upward resumed, okay, so this was it. We're talking about 2023. So as our 2023 price was as low as 25,000. Wow. Imagine if you have bought BTC at 25,000 and now is 100 and something thousand. All right. So look at the price of BTC today. That's just the last 3 years. 2023, last 2 years. You never even reached 2 years. So. All right. Okay. So that is for support. I mean, that's for trend lines. Okay. So now let's look at support and resistance. Support and resistance. Now, if you look at, there are some points that the markets tend to pause. The market does not move across those places easily. So now let's look at this level, for instance. So let's look at this level. Now, this is a support. This is a resistance. Now, why do we call it resistance? Now, look at market came here. It could not sustain it. It created a wick. It came down. Now, it took months again for the market to come. And when the market came down here again, it took how many days? It kept rejecting. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It kept rejecting this place. It will pierce, come back, pierce, come back. And at the end of the day, what happened? The market came down from that level. So this is a resistance. This is, as at this point, this is a resistance because the market, the price is below it and could not break through it. So this is a resistance. All right. Now, for support, we want to, now it is not something that is very that it must be very smooth for you to say, okay, the price is just at a, you want to, so now what determines support and resistance is the price. If the price is below, is the resistance. If the price is above, is support. Okay, So right now, this support that was created, all right, before now, is now a resistance. This resistance is now a support because price finally broke above it. Okay, price finally broke above this level and has come back to it how many times? 1, 2, and could not break below again. Okay, so price could not break below this level again. So we are trading above this level now. It is now a support. So this level that was a resistance earlier is now a support. Now it can be spotted anywhere. So now let's see here again. So you can say this is a resistance was created here. Now resistance was created here. This was a resistance because price was below, came, it bounced, came again, it bounced, and at the end of the day, price finally broke above it. So this resistance now has turned to support. Okay, so this is how you identify support and resistance. Okay, now the same thing that happened, it happened across all time frame, but there is a relation between this time frame. Now, for higher time frame, that is where you get a grip of what price is actually doing. That's where you can make some good decision of, so okay, are we really in an uptrend or we are in a downtrend? Is price going up or coming down? Because lower time frame, in between today now, you must have gotten up, down, up, down, up, down. Yet, when you look at it overall, it's up, it's going up. But between today, you have market has trended down, trended up, trended down, done a little consolidation, but yet the overall movement is daily. So you want to use all of this to judge, and we call them confluence when you link all of this time frame and also link some other indicators like other tools, indicators to combine to make your decision. It becomes a confluence. When you have a confluence, all of them are saying the same thing. You know, when you enter such trade, you know that, wow, this trade is a potent trade. Okay. So that's for support and resistance. I believe, like I've always told you guys, always put down your questions. You have questions you want to ask, make sure you put down your questions. When it's time to ask questions, you can easily remember and you ask your questions. All right, so I'm going to go to mobile phone now to also show you how you can do this on your mobile phone to draw the support and resistance, to identify trend on the mobile phone. Then when we finish with that, I will call on 1 or 2 persons to give us, just run through what we have done, if the message was actually being passed or I was just talking to myself. All right, so let me stop share here now. I'm going to be joining the call with my mobile. I'll join the call with my mobile. But before then, let me just look through the participants so that at least I will know who and who is in attendance. Most times I just run through without looking through. Okay, Hekinashi, you are here. What are you doing here? Okay. All right. Okay, no problem. Nice one. I've seen a good number of persons who are in attendance. Okay. Now, many people has fall by the wayside. When we started the first 2 days, were 52, and you have seen that the number kept reducing. All right, that zeal is no longer there to the way, you know, some person will just come and say, no problem. But when they see the first 2 days and say, this thing is just a beg, it not be my thing, you know, it's like that. That's why the first thing you must have is that determination. You ask yourself, is this what I want to do? Do I really want to do this? What are your why? All right. Now, in life, in pursuit, if you don't have a why, you will not really define your pursuit. But if you have a why are you pursuing this thing? If there is a why, there's a reason, definitely you will go for it. So what is your why? Why are you here? Now, let me tell you something about my why I found myself into Forex. Okay. I was in Baltimore in 2016. All right, 2016, I was in Baltimore, and all the people we were with visited, people barb their hair on their own in the house. All right, they barb their hair in the house, you know, and going to a salon. I was just a while now, you know, and all of that. And I visited one or two salons, and I saw that some of them were charging $50, some $30, and the least around $25. So after I have stayed for like 3 weeks and I needed to barb my hair, you know, I had to enter the cheap salon, you know, to barb my hair for $25. So after I finished barbing my hair, I paid that $25 and I did the arithmetic. I think dollar then was 350. I know the arithmetic was 9,000 naira. Okay, 9,000 naira was the total sum. So which was the outcome of the $25 that I paid? I think it was either 365 or 360 or so. Okay, so let's say 9,000 divide 25. Okay, it was 360. Yeah, that's what it means. It was 360. And I asked myself, then I used to barb my hair with 250, 300. I used to barb my hair with 250, 300. And that was when it dawned on me to say, wow, who am I? Am I a politician? That I will be barbing my hair with 9,000 naira. I said, no. I made up my mind that when I come back home, I must find a way to make money in hard currency. Now, the three currencies I was looking at was USD, GBP, and Euro. I wasn't certain of which one I was going to find myself in, all right, but I just know that I was going to start making money in hard currency, at least so that to mitigate against any, you know, of such experience. So when I got back home, I just was driving one evening, returning back home, and I had one guy on radio. He's a school, you know, this, that. I went for the event, you know, it was IML then. I went for the event, and that was how I found myself into Forex. So now my why is what I have just told you. There was something that pushed me, and since I started, like I've always said, I've not gone on break for one day. I've not gone on break for one day to say, maybe I came after, like, I would now go for like 2-3 months and I come back, I'll go 2-3 years and I resume again. No, I've been there and it has always, as in, it gets better by the day. No break. Oh, that's Ekinashi. No break at all. All right, so let me join the call with my phone, and we'll be doing this on the mobile. Now, another thing you must note is that
recording in progress.
All right, I have to disconnect audio on one of the devices so that I won't be echoing. Okay, so I've always said this from day one. Everything we have done here now, if you did not practice, you won't still get it. All right, you must practice this thing. You must. It's a must that you must practice. If you did not practice, you will not. And the reason why I decided to come and show us on a mobile, I know that 90 to 95% of us may be dealing with mobile directly alone for now. So that's why I want to show you that whatever we do on the laptop, you can also do it on your mobile phone, although there are limitations based on what you'll be seeing on the chart on the laptop. You won't be able to see that completely because the chart on your laptop, you see a very wider view. Okay, so like if you go to daily now, you can be seeing about 3, 4, 5 months. But on your phone, there is a much you can squeeze it to see. So that's just the little. Yeah. So let me share my screen. Let me share my screen. All right. So this is my screen. Sharing my screen now. All right. So this actually this trade we took it. I think the last day we were doing this trade is a demo, so it has still been there. I think we have parameters. We took this trade and it's still there, just running up and down. So let me even see what was our entry. Our entry was 993.80, and what's the date? This trade was taken on the 19th. So we took this trade the first day we started. The first day we started, I think, yes, we took this trade when we're just demonstrating. So this trade from 19th, you want to check. Okay, that's flip 1. Okay, so, 16, 19. So this is 19. So 19 is somewhere around here. 19, somewhere around here. So we took this trade, it came here, where came back, did not hit our stop loss, and it has come down into profit. Okay, so now let me okay. So right now, this I want to show us. Let me take out these guys. Now, all of these things, I set them, they are indicators. I was the one who placed them. If not, ordinarily, when you come to this chart, they are plain, and I'm going to make it plain ordinarily for us to see. Okay. All right. So this is the chart. Now I'm going to remove this moving average now. Okay. This is 20, 50, and possibly 200. Yes, I know. Okay, so all right. So this is the plain chart. Now, why was there all those indicators? Now, the indicators are used to help your analysis, okay? The indicators are used to help your analysis to make a decision with information, all right? So you want to buy, you want to sell, you want to make an informed decision. You want to make a decision with some confirmation. So let's assume you have analyzed this market with your naked chart like this, and you want further confirmation. By the time you apply those indicators, the indicators will tell you whether you are good or so. By the time you get all of them are saying the same thing, that's the language I used the other time when I said confluence. So if you now get all of them are saying the same thing, then at the end of the day, you are good. Okay, so this is actually the naked chart now Forget the asset does not matter. What we came here to do is to show us that you can still be able to draw this support and resistance on your mobile phone. You can draw your what do you call it? You can draw your trend line and all of that. Okay. So now for you to use tools on your mobile phone, on your MT5, when you're on your chart like this, just tap on the screen. I have tapped on the screen now, okay? Please listen, oh, everybody listen, because I'm going to call on 3 or 4, 5 persons to demonstrate this thing I'm going to do now to us this evening before we shut down. I'm going to call 2, 3 persons, so it may be you. It may be you. So please observe, listen, and it will help you. So you tap the screen. When you tap the screen, now there are a lot of things on this now. So let me try to just show you. Let me change this to red. Okay. So now you see this first one is settings. All right. Is settings. That's you want to do setup of your chart. Maybe you want to change the color to black. You want to change the color of your candles. You want to change your background. That's the settings you go to. I'm still going to come back there and we'll enter the settings. Then this one now is tools. This one is tools. Now, what are tools? Tools are your trend line, horizontal line, vertical line, all right, rectangle, box, okay, Fibonacci, different tools, different, they are here under this tool. Now, this third one here, this third one now is for you to change your chart. Now, if you observe, there's a way I press hold and I migrated from the previous chart that I was to this new chart where I hid the oscillator windows and I removed the moving averages. Okay, so MT5 actually gives you 2 charts, but you need to enable them. This is where you enable them from. Then aside that, there's another one here. This one, Naira sign. The Naira sign is for you to apply indicators. The Naira sign is for you to apply indicators. Now you see this plus sign. This plus sign is for you to activate your crosshair. I don't know if you know what a crosshair is, so that when your crosshair is, when you're on the screen, there is this line that will be following you when you're moving. Both the line is more like a cross, all right? Rectangle, both vertical and horizontal. So as you're moving it, it's moving, that's the crosshair. Now, outside this other 5, every other one you've seen here is time frame. Every other one you see here is time frame. So let me delete them now. All right. Okay. So right now, this is time frame. So let me change time frame. I want to change to 1 minute time frame. I click on 1 minute. Now this is 1 minute time frame. How do you know? How do you know this here? You're on 1 minute time frame. You're on 1 minute time frame. That's 1 minute time frame. Okay. Now, you want to change again to 30 minutes where we were. We have changed to 30 minutes right now. How do you know we're on 30 minutes? You look at it. This is 30 minutes. You're on 30 minutes. This is flip X 30 minutes. So I'm just showing you how to navigate on this chart now. All right. So, okay, so now we came here to draw support and resistance, and I've showed you tools. So first of all, we'll be needing those tools. So now let me show you. Okay, so now these are tools. You can see them. Trend line, rectangle, and all of that trend line, you know, so you can see them. All of these are tools. Now, these ones that you are seeing here, they are telling you where I have used them. All these ones are the ones I have used. If you go into my chart now, I've used all of this one in different charts, different assets. That's why they are recorded. It's going to be telling you, okay, this is a 30 minutes rectangle. It's giving you the time and the price where it is enter trend line. All right. It's giving you all of this. Now, so let's assume you see these ones on top of this place, these ones here. These ones are the ones frequently used. They are here because they are frequently used. I frequently use them, that's why they are here. But let's assume you don't use, you have, the one, what you are looking for is not here. You go to the very bottom, no? Object, you see this plus line, this plus on top. See this plus here, okay? You click on it, it will show you everything you need to see, and you click on the one you are looking for. So this plus is going to show you what you are looking for. So now you click on the plus. Can you see all of them? Vertical line, horizontal line, all right, trend line, trend by angle, cycle lines, arrow, equidistance channel, standard deviation channel, regression channel, Andrew Pitford, all right, Gaussian line, Gaussian fan, and Gaussian grid, Fibonacci retracement. All of these are tools. Now you can see shape. We have the ellipse, triangle, and rectangle. Then we have the Elliott wave. All right, all of these are tools. All right, they are called objects. They are tools that you use. So let's assume I want to use trend line from here. Now just click on the trend line. Now I have clicked on the trend line. All right, so I want to draw a trend. So let's assume the trend I want to draw is like this. So now this is a trend line. This is a trend line. I have drawn a trend line now. All right, I have drawn a trend line. So when you finish, you just tap it so that this block, you can see this dot, this black tick dot that will need, means that if you touch it, you can still easily move it. But if you touch it to make it go out, which means you have allowed it stay where you put it. Okay, so this is trend line. Now, if you remember what I showed us, what we have taught, I taught you on the both during the presentation and on the desktop image, you can see that this guy was doing higher highs and higher lows. All right. Okay, so it's just that this MT5 does not have a path that will easily draw higher high and higher lows for you. But let me just use let me use trend line. Okay, so let's say this is a higher. Okay, this is one. This one will take time anyway. Okay, this is another one. All right. This is another one. Okay, so this guy is actually creating higher highs and higher lows. Right? So this is a high and this is a low. This is another high. All right, but this high is higher than this previous high, so they makes it higher high. Now this is a low, this is another low. This low is higher than this previous low, so this is a higher low. Okay, I don't know I need to, okay, let me use this. Okay, so this is a low. We've created this low, and this is a high. Now this is a low again. Now this low is lower than this previous low. All right. Now from here, now we've created another high. Now this high is higher than this previous high. So This makes this one higher high. Now this makes this one higher low. This low, this is a low, this is a low that is higher than this low, higher low. Now this guy is going to, now the trend still continue. Now the trend continues. Can you see that after this level, it created another high, which is still a higher high? Okay. Now, are you seeing it now? This thing, there is no perfection. So we created this one again. Okay, so now let me begin to show you. Okay, so you can see a series of higher highs and higher lows right now, right? So this is higher high, higher high, higher high. Okay. Okay, another higher high. Now you see another, so all of these are higher low, higher low, higher low. This is a higher low. Okay, so right now, can you see here now that after this low that was created, it did not, it created a new high, but the high could not take out the previous high. Okay, it created a new high, but the high didn't take out the previous high. So that's to tell you that the market trend has changed. So it now created another high again and still did not take out this. Then now, so this one is the one that is called break change of character. So this is where you confirm that the trend is now this one that broke below this level. Now, so this was the, okay, all of these things, because the chart has moved, the thing has just scattered. Okay, so right now, this was the previous high, and it created this low, all right? So we're coming up higher highs, higher lows, higher highs, higher lows, right? But now there's a change of trend, okay? So this new high could not take out this previous high. So this one becomes a low. This one was, this one becomes a high now, it's a high, all right? But it's not a higher high because it's high, but it's lower than this one. This becomes a lower high, all right? Because it's already lower than this one. Now, this one was a low now, the low that was created. Now, there's now a new low. So this low is called lower low. Lower low. So now this what happened here now is called change of character, change of trend. Now the market went back up to do something we call retest or return to origin. All right, by the time you begin to come in and you are growing intermediate into growing into advanced, all of these things you have name for them. You maybe like now, as this was the impulse that broke this. So there is another block here. This guy came back to kiss the other block, then the market now came down. So you can now see that from here now, the market came down like this. So this is how to draw your support. I mean, you to draw your trend line and to identify your trend on your mobile. All right. Now, these things, you need to start using them to master them. You will not just come and it will just be that easy for you. All right. You need to use them. There's nothing compared to practice. There's nothing compared to practice. If you cannot practice, you will not get anything. All right. So your practice is your ticket to mastery. All right. So let me take out this guy. Now there's a way to delete. When you want to delete, you press hold. All right. When you press hold like this, it will give you all of this icon. Now this first one is to edit. All right. Now this one is to delete. What does this one do? Have I really used this one? Okay, I will check it. I've not really used it. This one is to delete. Okay, now you have pressed. So if I want to delete now that one, I will just, now that it's showing me delete, I'll just delete. It has gone. But these things are too plenty. If I want to begin to delete all of them one after the other, it will take me. So I just tap the screen, go back to the tools, and you see this delete button. But the only thing about this one is that everything I have marked is going to remove them. Both the ones I marked waiting for something to happen is going to remove them. Okay, so you see this delete button now. Now that you have come here, you just tap on the delete button. When you tap on the delete button, you see this other one again. This one now. You click on it. Now, when you click on it, it will check every tools you have used on different charts, on different assets. It will check them. Then when you click on delete, it will delete everything. Now, if I go back to my chart now, there is nothing on the chart. Even if I change assets and I go to like pin 400, there's nothing, no marking. I go anywhere now, I won't see anything. Why? Because I have deleted everything objects on my chart. Okay, so we've taken care of trend line. So now let's look at how to take care of support and resistance. So we're going to use, now for support and resistance, you tap again, we go back to the tools. Now for support and resistance, definitely you are using your horizontal line. So now this is a resistance as at this time. This is a resistance as at this time. Now the market came to it. It came to this first time, it rejected. It came this second time, it rejected. Came this third time, it rejected. Came this fourth time, it rejected. And it came and broke structure, broke trend. That is what do you call it? Change of trend. And what happened? The market came down. The market came down from that level. So this is a ceiling. This is a resistance, is a ceiling. Okay? Is a resistance, is a ceiling. So now let's go to identify support. Now, do you know that this same support will become a resistance later? Because this same support, the price is what determines for whether it is support or resistance. Now, support becomes resistance when price has broken above it, broken below it rather, for support. All right, becomes resistant when price has broken below it. Okay, so let's look for support now. Okay, so let's say now this market looks like what is in a support zone. All right, but it's just one standard touch I'm seeing right now, but it's still a support. But I need to show you something very clear that you will understand very well, just like this previous one that I used now. Okay, so let's use this one. I'm picking the horizontal line and I'm dropping it here. Now, this is actually a support. Now, this market came down all the way from this side The market came down. Came down all the way from this side and tend to want to break through. It broke through but could not sustain it. All right. It broke through but could not sustain it. And it went back up again. Went back up again, came back to it, bounce, came back again, bounce, came back again, bounce, came back again for the fourth time and still bounce. Now it's after this time before the journey upward now resume. Okay, so this is a support. Now this thing happens across all time frame. It happens across all time frame. All right, so this I think we've done noble today. We're going to be ending it here. I will stop the recording now. Then we will, apart from questions, I would want 1 or 2 persons to demonstrate what we have learned today for us, so that I can be sure that people are really learning.